All right, welcome back for another episode of This Week in Charts via Carnivore Trades and Wall Street from Main Street. If you're not done so already, give the video a thumbs up, like, comment, subscribe to the channel. Come find Jason on Patreon. Come find me on carnivoretrades.com for swing trading alerts and analysis. Anyways, here into the markets this week. So again, last week we talked about that 390 support area. Really the last 2 weeks we talked about that. We came down into it. We expected a bounce there and said, this isn't going to just break without a bounce and at least a lower high. Well, we got that this week. We gapped up on Monday, kind of continuing that little push off of that support area. Went right into this pivot here, and then it was all downside from there. And really on Friday, the catalyst was FedEx. They basically, removed guidance, and they said like the most bearish thing you could possibly say, basically saying that we're about to go into a global recession, this and that. And obviously the stock got pounded down 21% here. Dow transports were down over 6% at one point, finishing down just over 5% here. New 52-week lows there for the transports, heavy volume there as well. We also had quad witching OPEX Friday, so a lot of the move, you could argue some of it was exaggerated due to the OPEX, and you can see the market kind of like inched off the lows here by the close, and actually the futures actually got back to the flat line after hours. So if we flip over here, you can see there was the 4 o'clock close, and they actually kind of inched back up after hours there. That does indicate that some of the move was OPEX related, but overall it's really kind of undeniable here if we look on the weekly time frame. And everybody's going to focus in on the daily and said, oh well, we finished off the lows, so it's not that bad. But if you look on the weekly here of the spiders, this is a nasty engulfing reversal. So this is about as bad as it can get, and you're going to see this across the board. Pretty much every chart I'm going to show you today has that, at least as far as equity. The equity markets are related. So a pretty good reversal here, and we broke that 390 support after making lower high. We also broke this upsloping trend line and confirmed below that on Friday. So now this is going to be your resistance zone. Your first step will be, that 390 area. But the bigger resistance in my book is this trend line here, and you also have that 20 and 100 moving average kind of downsloping there. Big picture, trend is now back down. We're below all 4 major moving averages here. And this is going to be your first big test for the market if it can get up there. We do have the FOMC obviously next week. I don't think the market really cares. A lot of people are gonna key in. Is it going to be 50? Is it going to be 75? Is it going to be 100 basis points? I don't think the market really cares about that. What the market really cares about is the verbiage moving forward. Is it going to be data dependent? Are we going to be aggressive? Are we going to be dovish? That's really going to be what moves the market. Next Wednesday, we also have, interestingly enough, VIX-piration on Wednesday. So VIX next contract will expire there. It should make for an interesting day, especially the Thursday following the FOMC. So we could see a big move next week, and I'd be surprised, honestly, if we didn't. So lots of volatility going to be in the market pretty soon, although maybe Monday, Tuesday will be a little bit quiet as investors kind of, positioned themselves already and just basically everybody waiting on the FOMC, but it will be a big event nonetheless. Anyways, here, let's flip over here to the triple Qs for the NASDAQ. NASDAQ 100, same thing. So breaking through this area here, right around that 294, 295 area. So that support line is now broken as well. We did go and tag a 75% retrace from the lows. You can see right there, we just kissed it almost to the penny, really. And, you got a nice little bid off of that. So that may be part of the reason there. We got that technical bounce on Friday as well as the NASDAQ 100. It's a big indice, and that hitting a key technical area, generally is going to give you a little bit of a bounce here in the near term. But again, same kind of deal. Weekly engulfing reversal. And again, you can notice you back tested this trend line as well. Back over. So that was our trend line. We broke above it, and then we broke back down, and then we tested it on Monday, and we got rejected pretty hard. So NASDAQ 100 getting hit as well, and as well as pretty much everything across the board here. So big picture, we've got engulfing candles pretty much on almost every major sector here. We look at the semiconductors. Take a look here on the weekly. You got an engulfing there. We tried to bounce last week off of this support. Engulfing reversal this week. IGV, same thing. Cloud software gapped up this week, engulfing reversal. We talked about the Dow transports. Look at that weekly candle, guys. That's a huge, huge rejection here. Fresh new 52-week lows this week. So the transports are weak. And, we noted that last week when, crude had that dump on Tuesday right here, and the transport started to sell off in the morning. That was a real sign of weakness there, possibly foreboding to what we got this week. We also have, daily chart head and shoulder patterns here on a lot of key names. So it's a smaller, left shoulder, but it's valid. So here's your spiders, shoulder, big head, right shoulder. That did trigger this week. We've got one on Microsoft, the second biggest stock in the market. So shoulder, head, shoulder, that is now triggered as well. We talked about IGV a minute ago. You've got one right there on that daily time frame, and even the Dow transports as well. So there's one right there on the daily. Shoulder, head, shoulder. These have all triggered, and these are all big sectors, big names. So combine that with the weekly engulfing candle, and a weekly engulfing candle is about as bearish of a candle as you can get. So the market's under a lot of pressure right here. Now, of course, the Fed can change that. They could say something dovish, and you could get negations of these patterns. It's certainly a possibility, but the stage is set right here for a potential accelerated sell-off. And we do have, seasonally, the spring equinox is on the 22nd, which would be, I believe, Thursday. So that can also be kind of a natural turning point. Remember, the summer solstice, if we go back to June, I talked to you guys about this. I said the summer solstice is coming up on, I believe it's the 17th of June. And right on that 3-day weekend, we got a pivot the next day on the 21st, and that ended up being the low. So sometimes you can get a low, sometimes it can be, acceleration of a pattern. So we'll be on guard here next week, but overall, a pretty bearish picture as far as the technicals are concerned. Moving on to interest rates here. So 10-year Treasury yield did inch up this week a little bit, particularly on Monday, then kind of just went sideways for the rest of the week. 30-year, same kind of thing, up on Monday and then kind of sideways, just kind of flagging inside bar there. The big picture, though, is the 2-year. So the 2-year hit a 15-year low here, and I'm going to flip over to TradingView because I can have this chart a little bit better on here. If we flip over to the 2-year, you can see on the monthly, this is hitting a high since going back to 2007. And why this is important is, well, first of all, the 2s and 10s are back to a 42 bip inversion, which is pretty big. And what the significance here is that the Fed funds rate is at 2.25, 2.3, and the 2-year is at 3.87. So even if they hike by 75 basis points next week, they still have a lot of work to do. And what if we have another meeting in a month or two? What if the spread, or what if the 2-year goes up another 50 bips? It basically erases most of the work that they just did by hiking 75. So I think they're beating around the bush. They should just rip the Band-Aid off. That's just my opinion here, because they're just getting further and further behind the curve each time. Even though they raise, by 75, the 2-year goes up by another 50. The spread's just increasing anyway. So overall, my point is the Fed does have a lot of work to do still. And that 2-year yield is something we need to be watching. The bond market's not telling us that things are safe yet. The yield curves are getting further inverted. If we flip back over here, there's the 2 and 10. So that came back down to 42, over 42 bips. The 3-month 10-year came down a little bit this week, although it did bounce off the lows by Friday. Again, look at 5s and 30s, took a huge hit this week. Got a little bit of relief on Friday. And the 10-month 3-year, again, same thing, or 10-year, 30-year, 1, 2, 3 down, and then you got a little bit of a bid off the lows Friday. So the yield curve's getting further inverted. Again, just not a good sign here altogether. All right, flipping over to, let's get on to what do we got next. So yeah, home builders, same kind of thing, XHB, again, weekly engulfing candle. You're going to see this across the board on almost everything. IGB, BNQ, real estate ETF, big engulfing reversal with increased volume as well. So again, not a good sign here across the board. XLF didn't quite engulf, but still a pretty good reversal. Basically got back to where we opened last week, so a nasty reversal there. And then XBD broker dealers, which have been holding up better. Still a pretty good engulfing candle. They call that dark cloud cover. You get through most of that candle, but don't engulf it. Broker dealers, I actually talked to Jason about this about a week or two ago, and a good point here that I haven't, I've had this kind of question I've said on my channel a few times. It said it's interesting that these financials are holding up with the inverted yield curve, but Jason actually made a good point about that, and the volatility this year benefits broker dealers specifically because a lot of them are selling options premium and they collect money from trade commissions. So that could explain why the broker dealers are holding up better. Specifically, they have a little bit less credit risk than financials, but that does make an interesting point. As inverted yield curves, the credit market's a problem right now. You'd think that financials would be underwater here, but with the volatility this year, that could explain why they've had a little bit of relief with their profits. But anyways, moving on here, let's get over to commodities. So start with crude here. Again, nice little bit off the lows, and then kind of just retraced a little bit. I think this is just kind of OPEX stuff. We kind of went, we kind of went sideways most of the week, sideways to lower. I wouldn't rule out another little dip here in crude, but again, still love the level. And anywhere in this zone, like sub 85, somewhere in that area is a buy area, if you ask me. Still love it. Down here, XLE still holding up okay. It's still a strong area. I think it just needs to do some more weekly consolidation to get through this red bar. I would like to see kind of like more of a flaggish type pattern inside bar, sideways action to get through that red, that big sell-off bar. But overall, no real problems when you look at it. Trend is up. It's doing fine. Same thing with XOP and OIH on the bigger time frames. No real issues there. Nat gas. So another volatile week for nat gas. We had that big bid up on Wednesday. And we, we couldn't close above that red bar high at what, $9.13, we'll call it. And then on Thursday we had an engulfing reversal, and this is so fun. This is why I love charts. So we ended up triggering a head and shoulders here on nat gas, and I didn't draw this line in recently. I didn't expect there to be a head and shoulder pattern. This is that same trend line that I've had on this chart for a long time. I mean, like probably a year or more. So this trend line, which has been support, then resistance, then you broke above it, then it was support, then support, and then support. Now it's turned into the exact neckline of a head and shoulder pattern here on the daily. And that's targeted right about 650. I would be considering buying it at this area, because that's your head and shoulder target. You have 650, that area, support, 200-day moving average. I think there's a weekly 50 moving average upsloping in that area. So that would be an area here that I think nat gas could get a really strong bounce off of, especially if it comes down without any consolidation. But just very interesting there. I love that trend line. And that trend line has been money for quite a while here. But nat gas coming under a little bit of pressure this week, obviously, with that reversal and close lower. Let's get over to uranium quickly. So CCJ took a pretty big hit, down 3.25 on Friday. I think a lot of that is OPEX related. So you have a big thrust up into the end of quarter. A lot of retail pikers are jumping in on calls. People who weren't in the move here, they're trying to FOMO up at the top. That makes sense to me. It's very common to see something like that. You can see it even, the sell-off even started on Thursday a little bit. But, really everything, FedEx really kind of tanked the market and brought everything down. So this also kind of was just like a sympathy play as everything was red on Friday. But CCJ coming in a little bit, URNM as well, SRUUF also coming down. But again, the trend is up on the weekly time frame. I don't see any problems here. In the uranium sector, just kind of a pullback here from an overbought condition, all things considered. On to some of the ag names, MOS, a little bit of a negative here. So you did close below this green bar low on a weekly basis. So that is a negative, and you had pretty good volume behind it. A lot of that could have just be end of quarter volume. So just be aware of that. But I never like when I see that, so that's a little bit of a negative. The positive is you have a very, very strong uptrend here on the weekly time frame. So, near term, maybe it comes under a little bit of pressure here with some of these potash names. You see the same thing with Intrepid there, closing below that weekly bar low. But, all things considered, they're not in terrible shape, but just a small negative there. For these potash names. DBC, so ag, same kind of thing. A little bit of weakness here. You close back below this trend line. I wouldn't worry about it until you close below this pivot. So if you get below 24.48, that would be kind of problematic for me. But overall, again, same thing. Very strong weekly uptrend, and monthly. Let's take a look at the monthly as well. It's just overbought. That's really all. That's really the only problem. So once that 20-month moving average catches up to price, it may, have another run in it. But for right now, I think it just looks like to me the ag names are just doing backing and filling, so I wouldn't make too much out of it. Dollar index, what can you say? Remains strong, so it took a hit on Monday, and then Tuesday, just reversed. A huge power thrust, 1, 2, 3 inside bar into Friday. Obviously, I've been on here saying, look, we're looking for some type of reversal in the dollar. I don't know if that's going to happen or when that's going to happen. It's exceeded my upside targets, and you're parabolic on pretty much all time frames here. FOMC can obviously change that. If the dollar index falls, that could give the market a relief rally in the near term. But again, remember, like I've been saying, that will also give a tailwind to commodities such as corn, crude oil, soybeans, copper, etc. So there's kind of a double-edged sword there for the market. And if you ask me, the market's in kind of a no-win situation right now. But either way, dollar index holding up technically on a technical basis here going into the FOMC. Gold here. So gold, new 52-week lows this week. They always seem to hit gold during OPEX week, right? It's like every time. But either way, you did have a nice rally off the lows here. And I still like gold miners. Now, you guys might be asking why. If gold is weak, and I think gold can go lower, believe it or not. I think we could have a flash crash in gold. If we have a panic in the markets, it's not uncommon to see gold sell off first, and then it bottoms first, though. So just be aware of that. But if you look at gold miners, actually, let's just stay here. So, lower low here on gold. And GDX, it's starting to put in higher lows, and it's showing relative strength. A lot of the time, the miners will bottom before the metal. You got to look at every chart based on its own merit. The correlations can break down sometimes. And what I'm seeing is accumulation in the sector. Now, that doesn't mean if gold sells off sharply that the miners won't sell off, but they can hold up better. They can hold up much better, and see less distribution, so to say. And actually, they could see accumulation into that. So just be aware of that. Yes, could they go lower if gold, has a panic or something like that, or if it's used to sell off, cover margin debt in a volatility event in the equity market? Yes, absolutely. But they're showing relative strength now, and I'm seeing accumulation. So I do like the miners here, GDX, GOA. Look at how they recovered. By the way, look at how they recovered on Friday. GDX up 1%, GDXJ, if I can type it in right. GDXJ down just 10 basis points. GOAU down just 3 pennies here. Whereas the spiders were down, 0.75%. Triple Q is down 60 basis points. So they showed some. I mean, look at Newmont on Friday, up 3%. I've been telling you guys I love Newmont down here. I've been telling you guys I own Newmont. I bought this dip down here. Look at that reversal there. That was in the end of quarter. What do you think smart money was doing end of quarter right here? They were probably rebalancing into this. So again, don't want to get too sidetracked here, but I am seeing accumulation here in the mining sector, and I like what I'm seeing here, especially going in end of quarter. So they're showing relative strength relative to the market. We were seeing some accumulation in Sandstorm. There was some pretty good buy action going on here. Don't worry about this OPEX stuff on Friday. There was accumulation going on here last week, and I definitely saw that in the charts and really in some of the work that I've done trying to investigate that. But overall, let me get too sidetracked here. I do like the miners down in this area, even if gold does slip a little bit. On to silver. Love silver right here. I think we put in a low in silver, and I love the inside bar here. Test candle on Friday, tested the lows, came back up. Just need a little bit more consolidation, and this has real legs to move higher. Same thing with platinum. Platinum is a rock star right now. Beautiful inside bar. Got rejected off that 100 moving average, and then right back up the next day. Test candle again. I love this. Want to see a little bit more sideways action. This will blast off to the upside. Copper here. Potential series of higher lows now. So we need to see it take out this high. But, you know, it's hanging in there for now. We'll see what it does over this week. Again, the FOMC could move it. The only kind of negative with copper right now is if there's too much, if there's fears of the Fed overdoing it, you know, recession could hit copper in a negative way. The recession fears could hit copper in a negative way, essentially. But overall, it's, you know, got a nice bounce off the lows, and you potentially have a series of higher lows here. All right, on to Bitcoin here before we wrap up. So we had the merge here with Ether, and that looked like kind of a sell the news event. And speaking of head and shoulders here, I forgot about this one. Take a look there. So the white upsloping trend line, shoulder, head, shoulder, that is in just about triggering right now. So we'll see what this candle looks like. I'm doing this video on Saturday here, but that could be a head and shoulders that has triggered. And it looks like the merge is a sell the news event, at least in the short term. But for Bitcoin here, so again, it's kind of just stuck in this little range here. It got rejected at the just under 23,000 handle, and that 50 moving average there. But look at this trend line here, going all the way back to the all-time high. So 1, 2, 3 hits. So a pretty good rejection there. And you know, Bitcoin overall, you know, it's just kind of stuck in this range. And on the bigger time frames, you know, you still have just weekly inside bar consolidation. So there's nothing really changed here. And you can see on the monthly, I know this is a messy chart, but big monthly inside bar. You know, overall to me, it's not a bullish technical pattern here. It doesn't mean in the near term it can't get a bounce or a bid here, but overall this does look like wants to go lower, possibly down to that 12 or 13,000 handle. All right, anyways, going to wrap it up here. Let's take a look, one more look back at the spiders. So again, major resistance here for the S&P next week is this upsloping trend line. You'll have a little bit at 390. Depends on where we open next week, but this is going to be kind of your big level here for next week. And then obviously the FOMC is, you know, going to be market moving, and I think we'll get a big move in either direction. But anyways, guys, going to wrap it up here. Come find Jason on Patreon. Come find me on carnivoretrades.com. I'll talk to you all next week.